Welcome to the weekly review for calendar week 17. Today, we're going to go through everything step by step. Let's start off with the market data, specifically as of the close of trading on Friday. The S&P is at 7,100 points. That's an all-time high, up 0.6%. The main driver here was pure AI euphoria. Nvidia has broken the $5 trillion mark. Intel up 24% in a single day. The DAX is the opposite. 24,000 points, 5 consecutive days in the red. Frankfurt is weakening. Bayer, Mercedes, and BMW are dragging it down. Europe is lagging. The US is running ahead. The crucial point for our portfolio is burning at $105. That's up 9.7% compared to last week. Hormuz, day 57, still closed. Witkoff and Kushner were in Pakistan for direct talks with Iran. However, there was no result. As a result, oil remains high, tanker rates are exploding, and energy stocks continue to benefit. Gold is surprisingly at $4,697, down 3%. Risk-on has absorbed the demand for safe havens for now. Hold the position, do not increase it. Bitcoin is currently at 78,126. That's a plus of 13% since the beginning of the month. The discrete index is generally at 70. Let's move on to the big sector, namely energy. TotalEnergies expects a strong quarter one. Trading and high prices are offsetting losses in the Middle East. In addition, TotalEnergies approved a 1 gigawatt wind farm with a 600 megawatt hour battery storage facility in Kazakhstan. Quarter one figures will be released on Thursday, April 30th. Chevron has made two clear statements. First, if Hormuz reopens, tankers will need naval escorts. That was from the CEO. Second, the kerosene shortage is driving up flight prices and reducing the number of flights. Earnings are coming up next week on May 1st, and that will be a highlight date here. Eni has reported a huge natural gas discovery off the coast of Indonesia. In addition, share buybacks have been increased to 2.8 billion euros, even though quarter one operating profit was weaker. The annual forecast has been raised by 20%. Z-Bank has raised the fair value to 28 euros, confirmed with a buy rating. Eni assumes that the Middle East crisis will hardly affect the oil business and is planning to reduce debt. That's a clear story. Equinox expects higher trading profits in quarter one because the US-Iran conflict is pushing up volatility. But caution, Danske Bank has downgraded from buy to hold. The price target is 385 Norwegian kroner. At the moment, caution is advised. BP. Shareholder revolt at the annual general meeting. The majority rejects cuts to climate reports. The chairman rules out a follow-up motion. There's headwind here. Additionally, there is a lawsuit over the Cascata deep sea project in the Gulf of Mexico. BP is currently uncomfortably in the spotlight. And here Q1, Wednesday, April 29th. OMV, and here there were three things. First, OMV is passing on the full 5-cent margin reduction on diesel to customers after clarification from E-Control. Second, OMV has drawn 56,000 tons of crude oil from the National Emergency Reserve. This shows how serious the situation is here at the moment. Third, Emma Delaney will become the new CEO starting September 1st, 2026. A change in strategy is involved here. The SPO still wants to involve the OGB regarding the fuel price cap. Now let's move on to the mining block, specifically Newmont. Newmont is the mining star of the week. Quarter one clearly exceeded expectations. Record free cash flow, and most importantly, a new share buyback program worth $6 billion. Annual target confirmed. The stock is slightly weaker after the numbers, but operationally, it's delivering across the board. With gold at $4,700, this remains a very attractive stock. Rio Tinto. Iron ore and copper production rose significantly in quarter one, but RBC lowered the price target to 6,300 pence. Sector performed operationally strong, but the valuation is currently mixed. BASF. Bernstein raises the price target to 61 euros, outperform, and that's positive for BASF at the moment. Briefly mentioned, Fortescue reports record deliveries, but the revised Iron Bridge forecast is weighing on the stock. Fresnillo confirms its annual forecast despite declining silver production. South 32 lowers its manganese forecast after a cycle. Now let's move on to shipping and pipelines. Hapag-Lloyd still hasn't sent its ships through the Strait of Hormuz. The Thema Express has now left the Persian Gulf, which is a smart decision. Given the current situation, you don't want to go through there and bridge. There are two pieces of positive news here. Canada has approved a $4 billion expansion of the West Coast pipeline, and that's huge. On the negative side, however, the US Supreme Court ruled against Enbridge in the Line 5 lawsuit. The case remains before the state court in Michigan. Both happened on the same day. Earnings are scheduled for May 8th with a focus on gas, renewables, and data center opportunities. Now let's move on to Kinder Morgan. Quarter 1 exceeded forecasts thanks to a stronger gas business. This solid pipeline player is currently benefiting from the LNG boom. AGNC Investments' first quarter earnings per share and revenue beat by over 13%. Yield here, tangible book value, is currently recovering. A highlight for income investors, but the mortgage REIT sector is experiencing payout volatility and weakness at the moment, so it's best not to increase positions for now, also due to high interest rates or uncertainty about where rates are headed. We had already discussed this clearly. Let's now move on to pharma and specifically to defensive stocks. Novo Nordisk was completely unused this week. Itapia achieved its primary endpoints in the phase 3 study for sickle cell anemia. Positive data plus Ozempic and Rybelsus are expected to receive approval for children and adolescents from the age of 10. Additionally, a partnership with OpenAI for faster drug research. All of this sounds great, but the stock is barely reacting or is even falling here. Reason: Pfizer is advancing a once-monthly GLP-1 candidate that would directly challenge Novo and Eli Lilly. Plus, oral pills are becoming the standard. Competitive pressure remains the real killer here. Bayer, facing decisive weeks ahead. The Supreme Court has terminated the Donald case in the glyphosate matter. The stock is falling ahead of the hearing. Since the Monsanto acquisition, Bayer has accumulated 24 billion euros in legal costs. A decade of decline since the Monsanto acquisition. Philip Morris, quarter 1 exceeds forecasts for both profit and revenue. Growth driven by smoke-free brands. EPS forecast for 2026 raised, still solid here. Altria is being positioned as a defensive income investment with high yield and a new push into smoke-free products. That also fits well into an income portfolio. We'll take a look at all of that calmly and thoroughly as well. As I said, pharma and also tobacco stocks are in the defensive sector. I had set up a poll regarding REITs as well to see what people want to look at. You can still vote on that before I get started with the whole thing. Now finally, let's move on to the automotive industry. Mercedes-Benz is cutting its dividend from €4.30 to €3.50, and that's a significant reduction. The criticism at the annual general meeting was accordingly strong. Sales in China in quarter 1 were down 27%, and that's really brutal. The company is focusing on margins instead of discounts and will launch 40 new models by the end of 2027. In addition, there will be an electric C-Class with Samsung batteries. Recall of 9,000 G-Class vehicles due to wheel bolts. Shares are near the March low. Currently, there is a downward trend here. Now let's move on to Volkswagen, and it is lowering its China targets, adjusting production and reducing global capacity to around 9 million vehicles. Olaf Lies has proposed building Chinese models in German factories. RBC has an outperform rating with a price target of €131. Goldman lowers it to €97 with a neutral rating, but VW remains the market leader in the growing EU market. Lease rejects plant closures. BMW clearly sees itself as a Chinese partner, while local brands are increasing the pressure. It sells more electric cars than its competitors. Zipser defends technological openness and introduces the new Class 7 series with Game 6 batteries. No clear trend, but operationally stronger here than Mercedes. Stellantis. Opel faces a potential loss of importance due to the focus on Jeep, Ram, Peugeot, and Fiat. Stellantis investors are currently neutral. This is bad news for the Opel location. Now let's turn to Porsche. It is selling its remaining shares in Bugatti and Bugatti Rimac to a consortium led by HOF Capital. 45% for a total amount that is known. Rimac takes over operationally, plus there are allegations of sexism against the manager. The supervisory board expresses its confidence, sees no need for action, and there is currently no clear trade. Now let's move on to Lufthansa, and here we continue. 20,000 short-haul flights have been cancelled until October due to a kerosene shortage. After the closure of CityLine, that's 4 times more than originally expected. In addition, the European Court of Justice has declared the EU's approval of Lufthansa's COVID aid invalid. Legally and financially, this is a hot topic. Then there's everything surrounding it. The Economy Basic now comes with paid trolley hand luggage. This is a classic crisis cost-cutting move. New boss uniforms for 33,000 employees. PR direction. Maintenance of the Bundeswehr's P-8A Poseidon, new contract. But today, a Swiss aircraft in Delhi was evacuated due to an engine problem. For dividend investors, Lufthansa remains unattractive at the moment. Strikes are on pause, but the safety net is gone, fuel costs, the ECJ ruling. These are simply three tough burdens. You really have to take a close look at how things stand here. In any case, I am invested in Lufthansa. Back then, I was hoping for a good entry point as well. I bought, well, let's say, Lufthansa when the federal government basically released all the support packages again. That's when I jumped in. Now let's move on to telecommunications. AT&T. Q1 delivered a positive surprise with more mobile customers than expected. Revenue is rising, but the stock is weighed down by higher debt. Still, this is a solid income position here. Furness has placed a €350 million promissory note loan to replace the bridge financing. Orange is preparing the authorities for a possible joint bid for SFR. Telecom consolidation in France is getting closer here. The One Energy fusion with Coterra is underway. Analysts are contradictory, inconsistent. Yatseo is investing 120 million in Juntu distillery in China. PayPal is benefiting because Vero is not performing in e-commerce. Canto raises to $54, but Mizu downgrades to neutral. Now let's move on to the outlook for calendar week 18. Next week will be the most important in months. Wednesday, April 29th, Powell's last FOMC meeting. A rate of 3.5 to 3.75 is already priced in, but his tone regarding inflation and demand could move the market. Right before that, BP Q1, and afterwards, Microsoft and Meta after hours. On Thursday, April 30th, TotalEnergies Q1, Mercedes, VW, Stellantis. All the Europeans on one day. After hours, Apple, Amazon, and Alphabet. On Friday, May 1st, Chevron and Exxon Q1, and these are the dates that directly validate my energy exposure. Plus, the US labor market. Here's a quick summary again. Energy remains the homeless trade, INI with buybacks and Indonesian gas, TTE solid ahead of Q1, OMV tapping into emergency reserves. Second, Newmont is the news of the week. A 6 billion buyback is a statement with gold at 4,700. Third, Mercedes dividend cut from €4.30 to €3.50, and that is indeed a warning. Anyone who bet on auto aristocrats can see the operational margin pressure here, and Lufthansa remains the loser of the week, if not of the past several months. If you like this format, I would appreciate it if you could give this video a thumbs up. Otherwise, if you're not yet a subscriber and don't want to miss any more series or weekly recaps, I'd be happy if you subscribed. Otherwise, let's quickly go through the macro dashboard again. Inflation at 3.29, key interest rate currently at 3.64. The yield curve is currently at 0.53, the money supply at 4.88, so that's an increase. Otherwise, volatility is at 18, and the fear and greed index is currently around 66, while the 10-year yield is at 4.31. So, exactly. Otherwise, let's just take another quick look here to see if there's anything else we can discuss. But I think we've already covered a lot here and have gone through quite a bit in the end. Let's maybe take another quick look at the sectors and see where the money is flowing. That's actually pretty clear as well. Money is flowing into energy, technology, utilities, real estate, and industry. It's flowing out of basic consumer goods, finance, financials, cyclical consumer goods, and also healthcare. Those are currently the most important positions, so to speak. Otherwise, as always, this video is not investment advice, but simply my personal strategy. See you in the next video. Until then, ciao.